Hey everyone, welcome back to Corporate Decoder. Today we're diving into Supermicro Computer's latest report, and let me tell you, it's not just about computers, it's about some seriously surprising numbers that could make or break your investment. Think big swings and even bigger implications. In this episode, we're unraveling Supermicro Computer's financial performance for the quarter, zeroing in on whether this tech company is living up to the hype or if the numbers tell a different story. We'll skip the boring stuff and get right to what impacts your wallet. Before we jump in, if you enjoy decoding these corporate reports, make sure to subscribe and come join the discussion in our Discord community. The link is in the description below. Alright, let's get started. This report is dated May 6, 2025, so it's pretty recent. It's what's called an 8K filing, which is basically a quick update companies give to let investors know about important stuff happening. In this case, it's about their earnings, meaning how much money they made. The main thing in this report is a press release about Supermicro's financial results. A press release is a document where a company shares news with the public, so let's see what they wanted everyone to know. Now, before we get too deep, there's a little disclaimer here that the information in this report is not necessarily filed in the official sense, meaning the company is not liable for some things that people could misunderstand. This is to prevent them from being sued. This is quite standard. With that in mind, let's dive into the juicy bits. Supermicro Computer is traded on the Nasdaq Stock Exchange under the ticker symbol SMCI. This means you can buy and sell their stock publicly. Their stock is valued at only a fraction of a penny, which is again very standard. Okay, let's cut to the chase. The real meat of this report is in the exhibits, specifically Exhibit 99.1. This is where the full press release with all the numbers is, so let's jump there and see what's going on with their financials. Alright, after skipping a bunch of legal text, we're at the good stuff. It looks like Supermicro had a pretty good quarter if we listen to this press release. Let's check some important numbers. The company is very happy to announce that they had an earnings per share of $2.29. Earnings per share, or EPS, is a key number that tells you how much profit a company makes for each share of its stock. It's a quick way to see if a company is making money or not. Their revenue was $3.85 billion, which is a very large number. It means that money came in, but revenue can be misleading, as a company can have a lot of revenue but still not be very profitable after you pay all your expenses. The company's gross margin was 15.6%. The gross margin basically tells you how much profit a company makes on its products or services after subtracting the direct costs of making those products or services, like materials and labor. So if your gross margin is 15%, it means that for every dollar of revenue, you have 15 cents left over to cover other expenses like rent, salaries, and marketing. The number 15.6% is good, so it seems like a great result for the company. The company is saying that this quarter, revenue increased 200% year over year. That means that revenue has tripled compared to last year, which is insane. But how can the company perform so well? Let's see. The number 200% is definitely not normal. It could mean the company is in a hot market, but it could also be unsustainable. We're not normal. It could mean the company is in a hot market, but it could also be unsustainable. We will have to wait to see coming quarters if this is the new normal or not. Now let's move to my overall opinion of the filing. Supermicro appears to be experiencing a huge surge in growth, which is undoubtedly exciting, but there is an important point to take into account. Such rapid expansion always brings challenges. Can they manage their supply chain effectively? How will they handle increased competition? And can this level of growth be sustained? These are the questions investors should be asking. One potential risk is that Supermicro's growth might be too reliant on a single hot market or trend. If that trend cools down, their revenue could take a hit. The company must show that it can diversify its customer base and product offerings to remain strong in the long run. Overall, the company has an incredibly promising short-term outlook, but it is important to remember that high growth comes with high stakes. Investors should keep a close eye on the company's ability to manage its growth and adapt to changing market conditions. Alright, that's our breakdown of Supermicro's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.